Welcome back, episode 54 of the Ground Up podcast. Questions.
If you took everything away from what you've got now and to get yourself in the same position you are today, how long do you reckon that would take you?
5 years.
2-3 years.
Scary, isn't it, that you've spent all your life today and you could rebuild everything you've got in 3 years?
Businessman from, I think, decades ago, coined to be the most successful businessman to have ever lived, but died broke. He became a billionaire 4 times. He was amazing at making money and growing things, could not sustain them. And that's the real challenge of an entrepreneur, is growing something, but then actually making it worthwhile.
They say in the US, you're not a real business owner until you've already gone bust.
What are the top 3 trends shaping the UK property market in the next 5 years?
Permitted development is a great space to be in.
One of the most exciting commercial sectors is the life sciences.
There's also prisons. If you're in the prison game, you're going to do very well in the next 5 years.
If you would like to watch and laugh about 4 autistic people speak every week, please subscribe to the Ground Up podcast. Subscriber.
Wow, that was great.
All right, let's get on with it.
Ground up sound, ooh, yeah. Real estate deals. We lay them down, let's get those deals. Deals making money, baby.
I've been meaning to do this for ages, but I forget every time we get on the pod. But for all of our shorts that go out on Instagram, at the end of them, want to just have like a quick one line going, if you're into property and business, make sure you subscribe to the Ground Up podcast. Literally, that's it. So I'm going to do one. If you guys can do one as well. If you enjoy this kind of content, then make sure you go subscribe to the Ground Up podcast. Do like variations of that.
I fucking hate it. I hate this piece to can piece. And 4 developers across the UK. So I wasn't looking at the camera. Oh, mate, I watched some of the content back from fucking. It was great to see.
Just
Jack, sorry, I watched the more. I was like,
Keep all this in. Keep all this
Don't
in.
get distracted.
4 property developers around the UK. If you're interested in following our journey, subscribe to the Ground Up podcast, Ground Up Network.
The Ground Up podcast.
I know, I hate it, honestly. 6 o'clock in the morning, boys. I ain't waking up. 4 property developers around the UK, all sharing their journey. If you're interested in this type of content, make sure you follow us at Ground Up Podcast.
Couple more.
I'll dive in and do a couple if you like, and you can have a.
I'll do a couple. You do a couple. I was just trying to take in what I was thinking. Go on.
If you want to learn from our mistakes and our endeavours in property and business and earn some serious money, subscribe to the Ground Up podcast.
If you
like
like
what you
listening to our journey, oh sorry, mate. Oh, go on.
No, go on.
Go on, go on.
Go on. Go on.
Go on, Jack. Any more? If you enjoy watching our journey, if you like following our stories and watching us on Instagram, you should think about following the Ground Up Network, and where fuck's sake. I hate this piece. Honestly, I'd much rather just talk shit. Go on, Jack, you do another one. The Ground Up Podcast, the place where we meet every week to discuss our trials, our tribulations, and to share our stories and our journey. So if you're interested in following us, do to make sure you subscribe to the Ground Up Podcast.
I can see you adding words.
That's property, business, and everything that's happening in the UK. If you're interested, make sure you follow the Ground Up Network and subscribe below.
The Ground Up Network.
What are we doing? Are we marketing them? I don't know if I'm doing the network, the podcast. I was saying the podcast, all of the recordings.
Just a podcast, yeah. Just a podcast.
Jack, Dorian, Ryan, and myself get together every week to discuss all things property, business, and UK macro. So if you're interested in this journey and watching what we're up to, then do make sure you follow and subscribe to the Ground Up Podcast.
One more with a bit more fucking passion. Go on.
If you're interested in Bitcoin, then make sure you follow the Ground Up Podcast, where we discuss it every other week. When Jack allows us to talk about Bitcoin, we take every opportunity to discuss it. So if you're interested and want to know more, make sure you subscribe to the Ground Up Podcast. Subscribe.
All right, let's get on with it.
Oh,
Wait, I've got one more I want Stu to do. Stu, can you do one where you can say, if you want to do a deal analyzer, subscribe to Delegation.
It's a difficult word, mate. It's a difficult word in the dictionary. It's my dyslexia and a little bit of autism all thrown in one. So it all comes out in one long word. Blah, blah, blah. And it is like 6 o'clock in the morning, man. You know what I mean?
Let's record a new one. If you would like to watch and laugh about 4 autistic people speak every week, please subscribe to the Ground Up podcast.
Oh, fucking hell. Wow, that was great. Welcome back, episode 54 of the Ground Up podcast. And it's an early one this morning. We're a bit delirious. And big love, make sure you subscribe. Today, we're going to be going through ChatGPT has asked us a load of questions. They're fucking good questions. And actually, that's false advertising. It's not ChatGPT. This was Grok. Thank you, Grok AI. Has given us a load of questions and an interesting fact about property, business, development. Some really good questions as well. We're going to unearth some naughty detail today. And that's how we're going to make up this podcast. And a bit of a round table, how everyone's getting on as well at the moment. Dorian's not going to be with us today. He's had a late one getting back last night from London, and he's got an early one today anyway. So we're going to miss D. But anyway, enjoy the podcast, subscribe.
We've all been graced with his love, haven't we, this week? I think he's been around and seen us all.
Jack, can I have one of those posh coffees that you've got here?
First, we talked to him in. Oh, they got a Greg's. I was like, mate, we're going for a nice pizza or something. They've got, this nice pedestrian road around the back here. We'll just go for a nice pizza or sit down near the river. He said, yeah, but I fancy a Greg's. I'm like, we're going to a pub, mate. We're going to go have a nice dinner for half an hour.
He's lost weight. He's looking lean.
He is. Gymming it early morning and trying to avoid the Greg's, I think. I think he just fancied one. But yeah, no, he was good. He come to our office, met Megan, or my sort of right-hand woman, and brought Mia with him along with him. So we met over there at 8 o'clock. We were going to go for like a breakfast and try and get a load of stuff sort of talked about our process and systems, but time was against us. We had till about 2 o'clock with him. But yeah, Mia come and met Megan, and they spent a good hour chatting away and seeing how we work together to see if she can benefit from any lessons learned. And then we went to a few banks, a few HMOs, and done some recording for the ground up, which was cool. And then he went to see you, didn't he, Jack?
Yeah, he came to Henley. It was a bit of a flying visit because I was only free between 3 and 4:30. But he actually Ben doesn't come into the office every week. He's probably in the office every fortnight. And Ben was in, so Dorian did an interview on Scale Up. So check out his YouTube channel, where he'll be interviewing Ben and I and talking about why our partnership works and why it might not work, and asking us questions, which was good fun. And we also shot some ground up stuff. But no, it was good to see him.
Yeah, Dorian's doing this just for the benefit of the viewers as well. He's got a series on his YouTube channel called Scaling Up that he started about a month ago, I think it was, maybe a little bit longer. And if you're interested in like the detail and understanding how property business people and developers are struggling or prospering, then he's trying to dig into the weeds, isn't he? When he came up asking me loads of questions as well about systems, processes, all that stuff. So definitely go check it out. Is it on his Castell YouTube or his own YouTube?
I think the channel might even be called Scaling Up. Let me have a quick look.
I think the one thing I love about Dorian is that as successful as he is, and he is absolutely smashing it, he's still as humble as anything and wants to learn the smallest little systems that he can implement. That's what I just find fascinating about him. He's asking the smallest little questions about diary entries and stuff just to try and take 1 or 2%, which he openly goes, I'm here to make sure I copy as much as I can about your systems and, take the best bits and, and with pride, a copy with pride, I think he was saying. So yeah, no, he's a good lad. He's always fun, and Dorian.
At Dorian Payne Property. And that's where I believe he puts his videos up. He's doing really well. He's getting some serious traction. So yeah, go check it out.
Go check it out. Cool. How's business though, boys?
Yeah, it's good. It's good. We've had an offer actually on the whole of Windsor, which has been this week's conundrum. So we've got all the external changes now done through the listed consent, and we are now about to go into for the Class G to get the 2 flats. But a blue chip's come and offered us quite a nice package. It does mean that our investors might have to leave some money in for a few years, which is not ideal. So I need to cross that bridge. So I won't say too much yet, but I've got to chat with them next week to sort of talk through the different options. But yeah, that was literally yesterday's news. So it's all good.
Nice, mate. Sorted. Jack?
To be fair, mine has been outrageously stressful. I've had such a stressful couple of weeks dealing with sort of like so our social housing portfolio, we built it, scaled it, agreed a sale price, that fell through. We lost value in the market, which is things that we couldn't control. And we've had to renegotiate the sort of equity lending position in that. And it has been really stressful because They initially, and however way you want to word it, took quite an aggressive stance, which is panic stations, and I'm not talking like like I feel that my immunity to stress is massive. I'll be walking around the office and my PA will be like, "How are you not stressed about this?" And I'll be like, "Because it doesn't bother me. Like if I'm running a bit late or doing this or doing that, those things don't stress me out anymore." But yeah, it's been a pretty definitely a testing week. But you just got to get in the front line, pick up your fucking weapon, and do what you can. And it's been that, and we're kind of essentially. The equity partners like, what's going on with this portfolio? We need our capital back out, which is fair enough because it's now an income generating portfolio where time helps us. The value is now increasing and everything's looking a lot more bright. But it's a lot of money that we'd have to pull together. It's millions. So when they sort of say you've got a short period, they turn around and say we want it out and you haven't got long. And when I say not long, like weeks, you go, fuck. But yeah, we've managed to explain the situation, which took a lot of work, and show them that they need to collaboratively work with us, and sort of meeting on middle grounds. But they're taking their pound of flesh. But that's what I've been dealing with. It's pretty stressful because I've probably in the last, I'd say 2 months, I've done at least 50 hours just in this portfolio a week. So when you've got everything else going on, home life, other businesses, your team needs you. I've just been dialed down doing what I need to do to fight the good fight and get the result that we need, which has come at a cost elsewhere.
What are those 50 hours, Jack? Just like an idea of like what you focused on in those 50 hours.
Financial modeling, security checking, so going back through everything, actually understanding the capital structures, what they can do if it went wrong, what then I have to do if it goes wrong. So protecting your ass, looking forward to the future, capital structures, financial modeling, looking at where the value breaks, looking at speaking to recapitalizing partners. So some of the times the best way to resolve a situation with an investor is to bring a new one in and get rid of them. So it's been all of that. I've probably spoken to over 100 potential investors, which is time consuming, obviously. It's really good. I said to Ben, I was like, even though this is so stressful, I'm building out a bank of investors that I could just then pick up the phone and be like, they know me, that we've already done the yardage, but they might not have been interested in this, but we might be able to do something else in the future. But yeah, mainly like fact checking, obviously sitting down with the capital partners. One thing that's difficult is the lending partner is actually a shareholder in the portfolio, but it's via a different entity. That other entity is kind of like led by a different agenda. So it's conflicting. So there's a lot of legal stuff. And then you've got internal meetings. So if we go and have a meeting and they go, this is what we expect, I've then got to take that to this complicated portfolio structure with it's across the board about £20 million worth of stock with probably 15 shareholding partners that have an interest in it. So I've then got to take that away, divulge, socialize it, talk to everyone, align vision, take that vision back, make sure I'm happy with that. So just really stuff you don't want to be doing. But
wasn't the plan to sell this to an RSL? Just to
we
the whole
had
lot?
So we started this 4.5 years ago. We built 114 self-contained studios in South London, on 10 or 25-year leases. We then agreed a sale with a social housing landlord of 5.5% net, which would have meant we'd have all built and scaled and sold and made literally millions. That month where we were due to sell the first tranche of the portfolio, which was 12 million quid, and it was in 2 tranches, 2 halves. That month is when the mini budget came out, and Home REIT, who's the biggest social housing landlord and real estate investment trust in the UK, went under. So this market lost about 30% in a week in value because interest rates went out, shot from the mini budget. They mean the buyers were, if Home REIT didn't go bust, it would have still lost a lot of value. But it's a combination of the two. So it's things that we can't control, and so we lost that sale. No one was buying in the market because they were waiting for Home REIT stock, whether the administrator was selling them at 50p in the pound. That's now come out of the wash and it's now recovering, and the market's starting to get a bit more stability. But the income, the interest rates aren't where they need to be. So you've got this frenzy fire of social housing that one's got a bad name because investors have gone, is this safe? Are these guys doing it right? Because Home REIT weren't. I mean, maybe we could do a piece on Home REIT. They were buying stock off like marketing particulars, and they weren't actually the right floor plans. They weren't the right stock. So they're basically a terribly run real estate investment trust, and that all came out in the wash. So we've been recovering, and along with all of that, we had to change provider as well. So we're with one registered housing association who weren't good for us, and we made the right decision to port over. But you still have 85 grand a month mortgage costs and then no income because you're going from one RP to another. We finally onboarded and got up to date with our rents on the new one, which again was time consuming, and we've stabilized. So I've in some of these meetings, I'm like, if you said a year ago or 2 years ago, we're not happy with this, we want to call in the loans, I'd be like, fair enough, this is a shit show, but we've kind of sorted it all out. And now it's like, just take the income, take the slow burning future value, and that's kind of where we're at. And then obviously now we've got a knife in our back from the equity saying we want a result. So it's yeah, I mean, it's the gift that keeps on giving in a bad way.
You'd question doing this model, though, wouldn't you, for the future? Did you say in a previous pod that you would?
Yeah, so interestingly, I saw that one of Ryan's questions is something to do with like, what have you learned and what would you do differently? I could answer that now.
Just for the viewers as well, Home REIT. So the reason I always like to try and work out what went wrong. So I just literally Googled it. It says Home REIT breach risk management limit and loan agreements delayed. 2023 results revealed. Home REIT's delayed interim results from September 2022 to 28th February 2023 revealed that the company was carrying significant leverage and breached its loan covenant limit. So
someone would have made a lot of money though. There'd be a load of PE guys and they ripped it out of everything they could and just dropped the bag.
I tell you, who probably did the best out of that is the administrator. They probably charged an absolute fortune. It's the largest real estate investment trust in the UK. So imagine an administrator getting the teeth into that and going 500 quid an hour, complicated structure, bum 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 bum. Yeah. Anyway, so one of questions later is personal stories. Can you share a story about a project that went wrong and what you've learnt from it and how it applied to every development? And that's kind of like this is our biggest learning, really. And sometimes you've got to give yourself a bit of credit because the only things that have gone wrong, the only things that we can't control. But there's things that you can put in place so that when things happen that you can't control, and Dorian will say cost inflation in construction, there's things that you can put in place legally or upfront and build the foundation of that will protect you in the future more or make life more easy. And I suppose my two learnings are making sure that's legally agreed up front and you're comfortable with any eventuality and that you're covered in that space. And second, that you just grow. If this portfolio was a quarter of the size, it would be a lot easier to bail out and get out of the problem, but it's not. It's 4 times the size. So there's an element of we're very optimistic and hungry people, and that's sometimes not going to work in your favor. And you need to make sure you've got, we've got non-exec advisors, we've got business coaches. Sometimes you need to ensure that they're engaged and understand all of those details and keep you in check, because you can get a little bit carried away. Again, if this portfolio had sold a week before Home REIT went under, this would have been the best venture that we've done. It didn't, so it's the worst. And that's the delta between running the businesses we do, and it either gives you value or it gives you stress. And I can guarantee you're more likely going to get stress from something than value. So you need to be prepared for that. You need to be thick-skinned.
Well, I think it's a good point to emphasize for any viewers as well. Just that ambition can leave you exposed, and your challenge is to try and cover your exposure wherever you can, but also not hold yourself back from being ambitious. It's a very two-pronged attack, isn't it? If you're trying to grow something.
One of my first mentors, hugely successful guy, and lost it all. Literally in 2022. I'd probably say like I don't know his worth, but he's a property guy, really, really wealthy, did really, really well in every strategy that you could pull together. Really well respected in the industry, lost it all. And I met up with him after he lost it all. So I met with him frequently, massively admire the guy, still do. Trust him with my, with my life. I think he's an amazing person, very honorable person. But when I met with him and he lost it all, he said something to me which was really, really interesting, which I kind of resonate and touches on that point that you just mentioned there, right? He said, if someone said stop, I wouldn't have. He got to a point where he'd grown and kind of scaled and then was doing projects that could lose all the wealth. And he said, if someone said, don't do that, that's too risky, he still would have done it. And that just goes to show his mindset is not to, it's to take risks. And that's a really, one, I found that quite powerful because he sort of said that if someone said this is the risk, this is what happened, we're just taking the plunge. But it's also interesting to have that about, you got to another really good bit of advice, which a different person, a non-exec advisor, tells us. If you're stressed and you don't feel like you've got a choice, tell yourself you do have a choice. You can not do anything, or you can go against what you're doing, and you can deal with the consequences. So that is your choice. So again, back to the mentor, he had a choice, and that was to stop growing or take less risk, but he didn't want to take that option. So he made a choice. And I think that's quite a powerful context behind what we do and the risks we take. And
Why do you lose it all, Jack?
obviously I can't say, I don't want to say, but I can't say too much, but he was in hotels. So he scaled a big hotel portfolio, privately owned, had a really good credit line with a lender, a bank. He would have a model on buying hotels on 3 reasons: bigger than 50 beds, development or increase in value scope, and buying on a 10% yield minimum. So when he bought an asset, when he got in strike value and purchase costs, he would be on a 10% yield, which, when you look at his capital structure, makes sense. He had a debt facility at like 5.5 across the majority of the portfolio and was killing it. Where he struggled is he had scaled it massively. He was buying like big stuff, one a month, like really kicking the arse out of it. He's definitely a rinse and repeat kind of guy. Like, does a bit of something, likes it, and doubles down, and then scales out. And he's done that in pretty much. He did it in buy-to-lets, and he did it in HMOs, and he did it in developments, and he did it in hotels. And he essentially then went into COVID and didn't have any form of like leisure grants that you could get from the council or anything like that, because he was too big as an operator, and he just lost all the business. He couldn't, he was, if you're in the leisure space and you go into COVID and it's not like construction where you can carry on building and selling flats. It's not like HMOs where people still need to live there. It just stopped. So his monthly overheads just went from, cash flow positive a lot probably to completely flat.
Yeah, that'd be. I mean, I experienced it, mate, from from the band, just touring. Boom, no touring, no revenue. Oh, all right, well, that's fucking shit. Oh, can I just add an anecdote as well to what you're saying? I was listening to, I can't remember the name of the guest on the Diary of CEOs podcast the other day. I think he's called the Money Expert or something, and he was talking about a businessman from, I think, decades ago, and he's coined to be the most successful businessman to have ever lived, but died broke. So he was the reason he was successful is because he became a billionaire 4 times and went broke. And his whole thing was that he was amazing at making money and growing things, could not sustain them. And I think that's a telling story for a lot of entrepreneurs and a lot of business owners out there, where you can scale stuff. You can sell your way there, market your way there, have a phenomenal model to make the most of a moment in the market or a fleeting moment in the economy, something like that. But then actually being able to embed that and sustain it in a long-term business plan is a whole different challenge. And that's the real challenge of an entrepreneur, is growing something, but then actually making it worthwhile, that will stick around for the next 10, 20 years.
They say in the US, you're not a real business owner until you've already gone bust. And interestingly, my dad actually always says that. He says it's easy to make £1 million quid, but you try to keep it. It's. I think our environment is very different because we're in the property game. So if you're in a service-based business and you made £1 million quid, you're probably not that well versed in putting that to good use. But I feel like we've got already quite an advantage on. James Sinclair calls it the fast pounds and the slow pounds. So what you're referring to is people making the fast pounds, so finding something, doubling down on it, making really good cash, but then because they've built this lifestyle, they've got high income, got high expenditure, they've not put it into the slow pounds, which is like the residual asset wealth growing, and that may be asset classes in gold, property, stocks and shares, Bitcoin, whatever it may be. Whereas if you're just in a cash flow generating business, you might make a fortune and spend a fortune. It's why footballers go bust by the end of their career. They're on this lifestyle and really high cash flow, and then they go to right now. You can't kick a ball and get paid £1 million a week, but you can do whatever you want. And then I kind of go, fuck, how do I now? I'm spending 500 grand a week in my life, and then have you got to find that from somewhere?
How long do you reckon it take you boys to start again? If you took everything away from what you've got now and to get yourself in the same position you are today, how long do you reckon that would take you? In months, years, decades?
2, 3 years, probably.
3 years. Scary,
Right.
isn't it? That you've spent all your life to date and you could rebuild everything you've got in 3 years.
Yeah, 'cause I think the main
Jack?
thing you get is the knowledge, right? And the aptitudes and the hardiness. I think that is the main takeaway, isn't it? Everything else is a case of function and strategy and knowing how you could rebuild it. Jack,
Yeah,
I think exactly the same, right?
5 years.
Yeah, I think 3 to 5 years and you could rebuild everything you've got today. So it's possible, but then you sort of use that to balance the risk you take to go, well, this risk could knock me out. I mean, I you've always got to weigh up different strategies, right? And yeah, like Jack's saying, fast pounds, slow pounds, you've got to balance that. Probably about 30% of my wealth is in fast pounds and trying to take risks into trying to triple that money. But then 60% of my money and my wealth is probably in the slow pounds and in assets and in things that are there for the future.
Yeah, things that keep you alive, right? Things that keep you going in those times. So less speculative investments now means for a more secure roadmap when there is a bad market turn or something like that. But it does mean you might stunt growth a bit compared to those that triple down on growth areas. So this is that thing of lining ambition with sustainability as an entrepreneur, is difficult, like really difficult. Yeah.
It's probably worth translating that for our religious followers. Big up, thanks for coming along and subscribe. Is we talk a lot about cash flow in our industry, how shit it is. It's an absolute nightmare, and that's because this slow pounds, fast pounds. Is if, for an example, a friend of mine has a food van. He'll buy his stock at 7 o'clock in the morning. He'll sold it by 3 p.m. in the afternoon, and he's made a daily profit. So he's in fast pound business. He's making cash flow, and that's a great business to start in. Our issue is we've started in a slow pounds business, but we need fast pounds to grow it. So we talked, about what would we do if we start again, and pretty much everyone said cash flow generating business first, and then focus on the slow pounds. That's definitely a strategy that our listeners should think about. Like if you've got like a 10-year goal plan, just focus on cash flow for the first few years, and then go into longer term stuff, because the benefit of property and real estate is and other assets that go up in value over time is exactly that. Like duration or length of holding will really help you, but you've got to be able to have cash flow to get there. Otherwise, the profits are worth zero.
There's quite a few caveats of being a developer that sort of distinguishes you from like a traditional business owner. I think when it comes to cash flow, if you look at your cash flow in and outs and your asset and liabilities as they accumulate and as you pay down, you can see a correlation between where your cash flow gets stunted because of carrying, a lot of temporary debt that we have to do. It's really expensive. Takes one thing to go wrong and you could pay a penalty. Jack spoke about in a recent podcast. There's like a 90 grand penalty fee. So all those things. And if you're not managing cash flow in and outs with A&Ls, then quickly the L's part of your A&L, so assets and liabilities, for anyone who doesn't know what that is, then if your cash flow is not going to meet those obligations at some date, then obviously you're going to have a massive squeeze. And as a developer, you're always weighting those two things. And just one more thing as well, just when we were touching on, I think the difference between being a developer and a traditional business owner that might make us more disciplined in some ways, not for everyone, is that by nature of the work we do, we're always analyzing investment cases and ROIs on allocating money here. What's my return on that capital? We're always looking at those functions. And traditional business owners might not do that a lot because they're in, a fast-paced environment. They might be looking at more like unit economics and all that kind of stuff rather than the actual capital deployed into a business case, how that comes back out, dealing with leveraging, financing, investors. I think it does give you a slightly different mindset to then take into the business part of what you do, compared to traditional business.
It does play a massive part as well, the risk with money. And the reason why I look into the money and the macro side is because it's outside of our control, right? Like Jack said, you can make the biggest money in the world or the worst money based on quantitative tightening, quantitative easing, what's going on with the macro environment, the euro dollar, all these things outside of our control. I just take a massive insight in and try to learn as much as I can outside of this, because that to me is the overarching layer above business. And if you can have a bit of foresight or understand what's going on above you, then you can make a decision if you're going to, if you're going to make money or not. And that's the scary bit about this, is that we're all playing underneath the line, but there's so much power above the line that controls the destiny of our own businesses. So I'm reading a very good book at the moment, which is a new book that's come out by this Nick Batea. He wrote, I think, Layered Money, which is the first book.
Bitcoin?
It's the Bitcoin age, mate. It's the new digital
What's
revolution.
this thing
So, my
about
little plug.
the bitty coin? Bitty coin.
Bitty coin on
It's all
your
about that, baby. It's all about what the hell this is.
dollars.
It's so important, and I just think I'm just totally passionate about it, because the more you've got the understanding about what's happening above, our market, are we going into an easing market now where they're going to flood the market because of the crisis, right? If no one's got any money, they're going to flood the market, which then assets and the slow pounds will benefit. So we, as developers, we've gone for the last 3 years of quite tough times, right? Markets are not moved, money's been expensive, 5-year money's still high. The benefit of all that graft over the last 2-3 years is that we're going to about to see 3, 4, 5 years now of huge quantitative easing, where so many pounds or dollars are flooding the market that all assets, whether it's gold, Bitcoin, property, will fly through the roof. And when money's in abundance, interest rates are really low, which means commercial properties go from 5, 6, 7% yields to 4, 4.5, 5% yields. So as a property developer who's held property through the tough times, means that the markets, you're going to be making millions of pounds, additional pounds on top of a yield-based product. Because if your money's making nothing in the bank, then taking a risk of owning a commercial property or residential block is much more attractive to an investor, because they're making 5, 5.5%, where at the moment they're making 7. So it's been tough. It's been tough for everyone, but hold on, hang in there. And that's why I love the buy and hold, because it is the slowest type of pounds, and it's cyclical. We have quantitative tightening, quantitative easing. So understanding what's going on at the higher end does make it a lot easier to make bigger business decisions, in your own business. So definitely spend the time, put the graft in, and learn.
Learn about Bitcoin.
Always, man.
Always. Do you know what? I actually, I should use myself as a live case study here, just when we're talking about the exposure and balancing ambition with exposure and being sensible in certain areas, which usually just looks like forward funding for eventualities. And this last month, we've taken on 5 new team members, basically. So we recognize that we may have a maintenance and a sort of labor issue coming down the road if we don't have the resources. So we've hired 2 new full-time maintenance guys as well. So we've got 4 on the books now to make sure that those 2 can deal with what's to come. And the other big one, and we're also bringing on another sales rep as well to deal with sales demand. But the other big one is we've just brought on, as of yesterday, over the last week, we've been negotiating it. We've just brought on 2 new non-execs to our development and our construction business, who are essentially our architects who've worked with us for years. And I've brought them closer and closer to the business as the business have scaled. So brought them in a capacity recently over the last 6 months to help on CDM, to help on all the PD stuff that comes with that, and then to help on the contracts management side of things a little bit, contracts administration as well. And they've just been getting closer and closer and closer. And then I proposition them with, come and join the business, come take a stake in the business and help us grow it as we enter this new growth phase. Because we're now taking what we've done with the HMOs and we're going to do that for the commercial to residential schemes and really start to push, which has been our plan the whole time. and push into just doing big developments at scale. Try and be on sort of 20 sites a year at least. We're already gone 7. We've already got 7 commercial to resis. Now bringing them in as a backbone on the development delivery side, I know I've got the conviction to go, cool, we can raise the finance, we can structure these deals knowing we've got the best delivery partners we can get, who've got the architectural experience, the technical experience. One of these guys, Richard, great guy. He ran a big principal construction company before. He's been in the weeds. He knows what it looks like. Bring in the right accounting practices, all that kind of stuff we need to scale from. And it costs us equity in the long run, but it will mean we're much more sustainable over the next few years of growth, rather than trying to hire those experts in-house who could leave you. You could spend loads of time training them up in your business and they could leave in 6 months. It could be really expensive on overheads. So all those kind of decisions you have to balance if you want to scale. If you didn't want to scale, could just stabilize it, make a good bit of money. But fuck that, let's grow.
Guys, so a few weeks ago, you might remember, had this box sent to me, and I was like, "What the hell? Have any of you had this box is sent?" It's from Fixed Radio, which I think's a genius bit of marketing. Apart from I didn't read it, and they sent me a WhatsApp message to say, an Instagram message saying, "Did you get our box?" I'm like, "Yeah, I did, but I can't open it. There's this key on the front." So it says here, post a video across your social media channel, tagging Fixed Radio UK to receive the 3-digit pin to open the box. So, guys, send us the video, send us the pin, and then on next week's episode, we'll open it and see what's inside. I have no idea. I mean, wait, it's a bit like, it feels like an empty box. It's my honest opinion. So whether it's a bit of a joke, there is something in there. I don't know. Any guesses?
I hope there's a little foam middle finger in there. That'd be fucking great.
It's been on my desk, mate. It's taken up physical real estate on my desk for the last 5 weeks. So I thought I wanted to mention something on the pod. So yeah. Any guesses, mate? Any guesses?
It's got to be like a DAB radio, isn't it?
Do you reckon? Yeah, it's good. That's a good one.
DAB radio.
Mark in.
That's a good shout. Yeah. Yeah, I'll go
Anyway.
for radio. I'm with you, Jack.
Yeah, for radio. Well, stay tuned, guys, and we'll see what's in the box.
Pun intended. Stay tuned.
No pun intended.
Let's go to Grok's stuff that it's given us. So I basically said to Grok, so Jack said last night, let's just do a load of like questions and interesting questions and stuff. So Grok's given us a load of interesting bits, but also an interesting fact. And if you think about property development, it's super regulated now. We complain quite a lot about the regulations and things like that on this podcast. And the inception of a lot of these regulations and the sort of like establishment of our housing sector in the UK can be dated back to the Fire of London. So here's a quick anecdote on the Fire of London, which was coined as a property development revolution. In September 1666, the Great Fire of London devastated the city, destroying 13,200 houses, 87 parish churches, and landmarks like St. Paul's Cathedral, consuming 436 acres, which is fucking nuts. Starting in a Pudding Lane bakery, the fire prompted new building regulations banning flammable wood and mandating brick and stone, creating a safer urban landscape. Sir Christopher Wren's designs, including St. Paul's Cathedral and 52 churches, redefined London's skyline, while his urban planning ideas influenced modern city layouts. The fire displaced 70,000 people, causing a housing crisis that drove suburban expansion and showcased the property market's resilience, shaping London's real estate for centuries and creating wider pathways, wider roads to stop fire transition between streets, all these kind of things. And the regulations started at the Fire of London, which I didn't know until we Googled it, until Grokked it yesterday. That's pretty mad. Have you guys ever looked up the Fire of London before?
I studied it in like primary school, and I'm pretty sure we probably didn't learn about like building regulations and fire compartmentation and stuff like that. So it's definitely something that we should probably look at again. But yeah, never massively looked into it. And I actually didn't know it was like the trigger of obviously getting this in place, which is nuts.
What I've always found fascinating is that in this Victorian era, where they had horse and cart and they had pedestrianised roads, that they built the houses. I know we probably built cars to suit the amount of space we've got, but I mean, it was just perfect the way they built 2 houses, and yet they could reduce the pedestrian, increase the road, and have a working network even hundreds of years ago. Like, don't you find that fascinating that they didn't build the houses too close together or too far apart, and that roads fit in between these houses that were, built for the future?
I suppose, or did the future build for some of the existing infrastructure in a way, maybe car sizes and stuff like that when they were regulated? They might have gone, well, what's the suitable size of a car for the average household.
in between distance of houses. Yeah, that's what I've always thought. That must be the reason why, the optimum reason. But yeah, I just find it fascinating that they didn't build them because I mean, suppose a horse and cart would be bigger than what a car would be anyway. If you think about the width of what the cart would be, and if you've got people passing, then it's probably similar to. I mean, you'd build a cart to get 2 or 3 people to sit side by side, wouldn't you? So
Did you know there's huge protests when the car came about of people saying, we're seeing this AI thing now where people are saying we're going to lose jobs and stuff like that. When which is probably true, but when the horse and carriage was getting sort of abandoned for the cars, there was a whole lot of people protesting, saying, "What about the people's jobs who obviously run, yeah, and who look after the horses?"
I didn't know horses could speak.
Yeah, they can actually. They used to be able to. Then we sacked them. Okay.
So interestingly, just started talking about how amazing it was years and years ago. I went to Munich last year, maybe a year before, just as like a weekend getaway with the missus. And we went, I'm not absolutely butcher this name, but we went to that really famous castle that's on the very top of a mountain that stands out. And it kind of looks a little bit like Hogwarts.
Yeah, I fucking love that. Yeah, sick.
Yeah, it's called the like Neuschwanstein Castle. Anyway, it was built by King Ludwig II. But anyway, the reason I'm bringing this up is because it was built in 1869, and he had fresh running water, fresh running waste, electricity, and sorry, not electricity. That's a lie. And he had central heating throughout the whole building, and it was a castle built 250 years ago, which is nuts when you actually think about it. So because he was on top of the mountain, he had a fresh spring. He put the waste of the fresh spring into his waste of his toilets, and he had central heating. So he built a fucking fuck of castle that long ago and had all of the thrills that you would want in a modern day house.
Is this the one I'm thinking of? The one where you see it on like screensavers and B-roll, where it's like
Yeah, I'll show you an image because it is pretty spectacular.
Yeah, I've seen that one loads. Of fucking looks. I wanted to go there. I didn't actually know where it was. It's in Munich.
It's sick. It's so cool. Yeah.
He's just building that shit on the side of a mountain hundreds of years ago. It just looks mental, doesn't it?
Yeah, I mean the nuts thing is when you get there, the tour guide is like, there's a long walkway footpath up to the castle, and you can either she was like, we've got 3 hours here, so you can either walk up, it takes 45 minutes, or you can get like this little car that goes up. And we were on a bus of 50 people, right? And Kelly looked at me and was like, what are we gonna do? I was like, we're gonna walk. It's a 45-minute walk, and I want to take in the air. I want to walk up the hill. Anyway, we were gassed at the top of the hill, and there's a lot of people that got the car. And I thought to myself, imagine if I was carrying my tools up this hill 250 years ago to build it. And now in modern day, people are like, oh, my ankles, I've got to get the car.
That is mad. All right, questions. Grok has given us a different topics for each question. So the first one is market trends. What are the top 3 trends shaping the UK property market in the next 5 years, and how can developers capitalize on them? So maybe not 3. We could just give, what do we think the big trends are? Go, Jack.
I mean, planning is really shit and slow. So I would say if you're in the development space, permitted development is a great space to be in. Repurposing existing buildings, etc., etc. Obviously, we can probably do a bit of a section on AI and integrating that into your business and how that could give you competitive advantage. One thing that I think that a lot of us younger generation developers need to think about is the older generation developers have now not got that competitive advantage of being able to integrate technology and AI into their business. So that's a huge space that you should be using and working with. We're having a lot of success with like development / cluster HMOs, because I don't think build to rent in our location, because we've got high pound per square foot areas and similar rents, work very well down here. So we either build to sell resi flats or houses, build to hold if there's HMO elements, but sell every other unit that's in there. What else is there? I mean, data centers, definitely distribution and storage for like Amazon and relocating those sorts of spaces. Storage is really hot.
One that's local to both of you in the Golden Triangle, so that's kind of like the home county area of the UK. Apparently, at the moment, accounts for 80% of new life sciences labs, and apparently that's a huge growing sector in the UK. One of the most exciting commercial sectors is the life sciences, laboratories, commercial buildings, offices. through London, home counties, and other areas of the UK. And I'd have had no idea about that until sort of researched it.
A lot of them are located just outside of our HMO location.
As Jack was talking, I was literally writing down the same stuff. I had home automation and AI. I think there's a big business there where some of the people that I've been spending some time with integrating home automation into new properties. There's big business there. I think commercial to resi, which is what we're doing, which is taking existing buildings in old town centres and redundant uses and reconverting them into modern day living. I think there's a massive opportunity there. And I think HMO model is really where massive opportunity is at the moment, because cost of living so expensive. People are downsizing. They are accepting less for more money, which is the unfortunate position we find ourselves in. We need to base the currency we all work for. And the last thing, when you said about the Golden Triangle, is also prisons. I think there's quite a big increase in demand in prisons at the moment. So I think if you're in the prison game, you're going to do very well over the next 5 years. So
prison developer, that'd be an interesting person to get on the podcast. Who develops and builds prisons?
Absolutely.
Yeah, there's definitely some fascinating things to keep an eye on. I think another big one that we spoke about on a recent pod is the appetite from institutional capital, Blackstone, Granger Group, all the different PLCs to retain property assets in the UK, not just houses, but also not just apartments, but also houses. If that's the appetite from the big money, which is the cheap money, so have an advantage to all of us SMEs, they're looking at 10, 20, 30-year forecasts with their analysts. And they're seeing that the build to rent model, retaining assets, is where the value is in the UK right now. So that's something to keep an eye on. And obviously all of us are in that game of asset building and retaining what we can. Next question, personal stories. Can you share a story about a project that went wrong and what you learned from it that you now apply to every development? One of the biggest ones, if you're taking on a development, I think a HMO, you can get away with it a little bit more, but with a larger development where you've got all kinds of different design liabilities, cross-fractional warranties, M&E plans, all that kind of stuff. It's so important to have your designs locked in from day one, and don't get on the site. Don't get boots on the ground until you've finished off those designs. Do the design discovery, even if it means paying a little bit more on trial pits and exposing certain structural elements of the building, your asbestos surveys. Just get all of the unforeseens out of the way. And this is me talking about retrofits, so conversions. Just get all of that, all the schematics done before your boots on the ground. Now, you could maybe strip the building first if you can afford to cash strip it before you get into a dev facility or however you want to, value engineer that, because you're also degrading the asset as well. But I'd say, getting all your designs boxed off and then starting with your designs and staying consistent throughout. Couple changes here and there might be okay. A little wall position move because it might benefit the space a little bit more. That's all right. But any major changes down the line, it will just cost you a fucking arm and a leg. And it's cost me every time that we've done that.
Yeah, so I've got two. I was going to touch on the one you just said, which is exactly the same. I think don't be naive to the fact that the pre-construction part is as important. I look at it with the loft business, is that everything we do before we put scaffolding up is as important, if not more important, than running the particular job, because if you've done all your DD, you know exactly what you're working with, then you can plan for it. And if you don't know, you don't know. And I think touching on your strip out, I think we'd always want to strip it out with cash, and we'd build that in on our numbers to make sure that we've got the equity and the cash around us to go in there and strip, because no one can do a job and there's too many assumptions if you don't do that. So making sure that you can strip it out, everyone can see what they're dealing with, and you can see existing structure and everything.
Do you strip it before you get the valuation for the dev facility?
It depends on the facility lender. So obviously we'd explain what we want to do before we do that. So yes, we would, unless the dev facility's got, we haven't had a problem adding resistance, but if they've got a problem with that, then we would secure everything based on the value. Because when you strip it out, obviously the value drops quite considerably. So, but they would, if they want the final dev number, then we need to do it really, especially we're working now as a light touch build contract. But the thing I was going to touch on is actually from a business perspective, be careful who you hire. And it can mean so many things, but when you hire, when I was growing Skylofts, I was drawn to bringing in people I knew, because I thought that would be a safer way to grow a business, is having people who sort of know your deep values and what you stand for and what you work with. The problem is that everyone's got their own agenda, and when you employ people, it's not only difficult to change direction without them. You've then got this underlying issue of actually knowing them and being friends with them, and it makes things 100 times heavier to make the harder decisions. So it always goes back to hire slow and fire fast, and just it will feel like it's the right thing to do, and you feel like you're trying to do not a favor, but you're trying to help. You're trying to help yourself by help others, and try and build this big culture. But it does become very difficult if the business changes direction, and you need to. One of the hardest things I have to do is get rid of one of my best friends when I was setting up Skylofts. He was one of my right hand person who was doing everything, a little bit of everything. And as we grew, we sort of chopped his job up into proper departments, and then it got to a point where a few little mistakes were made, or a few massive mistakes were made, but ultimately there was no real job role for him, and having to take him for a coffee and say, look, the time we've worked together has come to an end is difficult. So that's a personal story that I thought I touched on when I read that. I thought, that is be careful who you hire would be my opinion.
And also, don't be, because I completely agree that some of the biggest mistakes we've made is putting people in the wrong positions, and it can be super expensive. And not just on the actual overhead, but your time that's spent with that person that you could otherwise be doing better things with. But also, you can't be afraid to hire, because a really good hire can absolutely change the prospects of your business. It can just change everything, having a really good hire. Matt's a good example of that. Matt coming into our business and bringing that brain and someone with that technical expertise, someone I can hive mind with, is helping, double, triple the size of our business on the marketing side. So and he's also a friend. So imagine Matt was shit at his job. Then I'd be like, yeah, Matt, look, you're not great, mate. So see you later. And that is that conversation you're talking about. Difficult with someone, you've just got to have a good dialogue with them and be like, look, let's keep it civil, but you're not working out, mate. I can't keep going with you. And that's a hard conversation. Next question. So business balance. How do you balance running multiple businesses with your property development activities? And what strategies do you use to manage your time effectively? I know Dorian and Jack have spoken a lot before about time management and different exercises you can do. So Jack, what would you say on this one?
Yeah, I mean, this is Dorian actually said to me when he came to see me in the office, he listed it. He was like, "You're a busy guy." And then he listed off everything that I'm doing. I mean, it is super difficult. I mean, balance isn't in my life and hasn't really ever been, if I'm brutally honest. I would probably say more sort of time management is more of a better phrasing on it than balance. I feel that there's, as a business owner, you do have to put the yardage in. You do need to work the evening oil or the weekend oil if it's necessary, and you're passionate about it. So it's not necessarily like you're counting the hours in something. So we're more talking about how do you slice and dice it up, right? And I think one thing that is initially hard to do, but then it gets addictive, is offloading stuff and actually outsourcing it and giving it to someone else in the team. That gets super difficult to do in the first place because you're a control freak. That's natural. It may feel weird going, actually, you do that, and you do have fuck ups. You do have monumental areas where they haven't done it how you have, and you've got to let them make them fuck ups and help them learn from that. So yeah, definitely. What's the term I'm looking for? Not outsourcing, offloading, delegating. That's the word I'm looking for. Yeah, I need another coffee, I think. Yeah, so delegating is definitely something that's difficult to start with, but then gets addictive. I mean, I just do work a lot. People say, how do you run multiple businesses? And that's because I work the same amount of hours in one business as a normal person would in running their own business. I see, for an example, a guy we buy ventilation systems off. He's got more sales than he can do output, but he probably only works 35 hours a week. And I'm like, fuck me, I'd be smashing the shit out of that, and I'd be doing 100 hours a week in that if there was a sales demand, and I'd be making up the operations. So like him, I could run that business that he runs and another and do 35 hours in both, and I'm still doing the same as what he's doing in one and more in the other. I'm an avid user of my calendar. I've literally just put in walk my dog this morning, so like every single thing that I do is in my calendar, and my wife has access to that, Ben has access to that, my brother has access to it. My PAEA moves things around. It's like detailed down to, if I've got a meeting, what attachments do I need? If I'm interviewing someone, their CV's on it. If I'm going to if I'm driving somewhere, the address and postcode is in place. If I need to stop for lunch, it's in there. So I'm a massive avid user of just putting everything on your diary, and then when you're free. And then I color code it to which business, so I can kind of see where I'm using my time. That then feeds into Toggle, TOGGL, which then generates a report every month of what I get up to, and it tells me what I've spent my month on, because it's easy to get caught up in doing things and overspending time in certain businesses and going, actually, I need to dial that down, spend more time in that business or spend more time capital raising. So I just track everything and let it speak to me and then see how I feel. And I've got rules of thumbs as well. Like, I don't really like doing more than 2 days out of the office. If I do 5 days back to back in meetings, going to site, it just gets too much from an admin perspective. So I balance that. And it's all about getting that balance. But essentially, work shitloads of hours, track the fuck out of it, and do what you can do, really.
Just on that, Jack is a unique specimen. He's a unique character, and we've met quite a few developers and business owners and stuff. And there is very, very few, if any, that I've met that are like Jack in terms of, like, he almost gets a hit out of being busier, where you don't have to be that busy to be successful. Just for the listeners, I mean, it sounds insane, and people might go, "Fuck that! That sounds too difficult to get going," but you don't have to work that hard. He obviously is super ambitious and wants to get where he wants to get to, but I totally agree with the calendar. I don't put every entry in there, but having people have access. When Dorian come in, he couldn't believe that everyone had total access to basically program in the next 2 weeks ahead of where I need to be. But by giving people the access and having the freedom for them to use your time the most efficient as possible, they'll cluster appointments that are in the same position together. They'll know there's an opportunity, and we'll see the opportunity to get the most I can out of a day that's coming up. I don't walk the dog in there and fill the car up with petrol, but I don't track different businesses, because I look at everything I do is one business, whether it's the developments, the HMOs, or the loft business. If there's an urgent thing needs to be done, it goes in ahead of other things that are less urgent, and that's just how we structure my time. But then I get visibility of everyone else's time, so if there's things that can be delegated to them. I mean, that was the power. Megan, who does a lot of the scheduling for the lofts now, but for years and years and years, I would do every final decision meeting, because no one else would do it better than me in terms of making sure decisions and having the foresight to eliminate problems. And I would never let someone else have the burden of having, effectively 80 or 90 contractors, mouths to feed, on the responsibility of someone trying to make sure the schedule is ran at optimum, in the optimum condition, and delegating those things off. I haven't touched them for years. And as soon as you can trust someone else to do these jobs, you never want it back. And then that becomes quite addictive. And then the more you can delegate and trust people around you and your network and your business, the more you can. It's a bit when you fly a plane, and when you fly a plane for the first time, all you see is a flat horizon, and it's just all different shades of green. And then over hours and hours and hours, and over 150, 200 hours, you start seeing the detail and the streams and the rivers, because you can take in a lot more. And it's a bit like business. Once you've got your foundations and your instruments secured, and your brain has the ability to take in more. And that's really where Jack's at now. He's got so many things dialed down. He can absorb so many more things on top. But yeah, it's just one step at a time, really. And it's just the balance of how big you want to be, how ambitious you are. But yeah, delegation and diary management is definitely important.
I completely agree. I think just to touch on that, Stu, you said that I'm not normal, but I also think some business owners have a false sense of security that they can just work a 9 to 5 and get through the shit.
Oh,
Do you think it's
100%.
important? Yeah.
My two business partners before I set Skylofts up, love them dearly. We're still the best of friends, and we wish nothing but love and respect for each other. But one of the guys is it still is one of the best builders I've ever known. But their mentality would be to finish at 4:30 and still run a business operation. I mean, don't get me wrong, they're super successful, and they do new builds now, and their quality is exceptional still. But when you are the other side of the coin, trying to do the sales, the operations, run all the infrastructure, it never ends. It's from 6 o'clock in the morning till 9 o'clock at night, 7 days a week. And the balance has got to be right from business partners as well. And over 5 years of trying that business, it wasn't right for all of us, and we went in our separate ways. But yeah, exactly. Some business owners think that they can still have a 9 to 5 mindset. Totally agree with that. And some businesses it works, right? If you're running a lifestyle business or a kitchen firm and you don't have to work all the hours, and you're happy to make your 10, 20 grand, 30 grand a month, whatever they're making, and that's their lifestyle, then happy days and fair play.
A mate of mine runs a recruitment company, very small. It's pretty much just him and a few people that help him with admin. His work-life balance is insane, so good. I'm actually seeing him later today. He probably works 2.5 days a week. He does really well out of it. He spends pretty much what he earns, but really he does. He earns a few hundred grand a year himself. Yeah, fast pounds. And he's out on the golf course. He's doing this, going skiing. He's enjoyed it. And sometimes, when you are me and you don't get to do that stuff. And I don't even have some time to eat dinner. Like, that's a lack of time I have. Exactly. And you sometimes look at it and be like, yeah, probably got something wrong here. But so but you do have to just trust it, rely on that passion that's driving you.
Your thrill out of life is the being busy. It's the fact you've got no more time to do this stuff. That's where you get actually a kick out of life, which is your insanity. But ultimately, that's his kick is to go and play golf and to have the time. And there is a balance, and everyone's different. But your life's about to change over the next few years anyway, just with life. And obviously, it's just that whole transition between 30 and 40, in my opinion, is like game changing. But if I was listening to myself now 10 years ago, I'd think I'm insane. My mind was so focused on not giving a shit. Working 8 hours, 8 days a week was the norm.
Tell me how you do that 8-day hack.
Well, I always say 8 days a week, 26 hours a day. It's impossible, right? That's what the business is like. It's impossible.
One more thing to add, just to balance out something Jack said, because diary management is something that I've learned over the last 2 years. Is the more that's in your diary, the more organized you are, the less fuck ups, the less double bookings that you make, and all that kind of stuff, which you just learn as you get busier and grow a company. But something I'd caveat that with, which is what Stuart's really saying, is being busy is one thing, but what are you being busy at? And for me, I try and always make sure that if I'm busy, I'm doing the things that I'm good at. And I don't want to be busy doing things that I'm not that great at. And that's where you delegate. And you, as a business owner, you've got to like look at those things and go, should I be doing that? Or is someone I employ or someone else I could outsource that to going to be better at that so I can focus on what I'm good at? And in my case, it's marketing and sales. That's where I want to be spending my time because I know I can have the biggest impact to the business focusing on those things. And other meetings and other types of things I might want to know about, but I don't want to have to spend time on those sort of things if I know if I'm not the best guy for the job. So I think you do have to have which is hard to do when you start out in a business because you might not have that ability to resource in that way, but you should have that ambition that as you grow, you delegate the stuff you're not great at. So if you're tracking it, it's easier to do that and just focus on what you're good at.
Yeah, but to do that, just to touch on that, right, your strengths need to be, I think you have to have huge strengths in the bit you're not doing as well, because they're the ones when you have to listen and ask the right questions to make sure that doesn't fall down, because you can be brilliant at one part, but you need to actually then spend your energy and time and outside the business learning what the other person is doing or the other department is doing. So, what your gut's telling you, if you're the CEO of the business, you need to make the ultimate decision. So it's difficult. But
yeah, you need a broad range of knowledge, enough to partake in conversation, but then be wherever you're vertical and impactful. That's where you should double down, spend your time, grow the business. Grow the business really is what you should do as a business owner. Yeah, I mean, fucking good episode, boys. Laughs, giggles, questions, answers, all that kind of stuff. Got to shoot now. We're at 7 a.m. We do record these quite early on for the pod. So make sure you subscribe. We're putting in the energy, we're putting in the effort as much as we can to make this a useful free piece of material that everyone can get their hands on each week. But we also have a paid model. So if you're interested, we have the Ground Up Network, which you can find the link at below on the YouTube channel. And it's £100 a month, 7-day free trial, so you can try it first. And we do this kind of session, but with the members of the network, and they can ask us any question they like, hash through problems, all that kind of stuff, help them with strategy. There's a guy, Matt, who's a member of the podcast, who brought up some floor plans the other day for a listed building. He was concerned about something, wasn't sure where to go, and quickly managed to resolve it and help him out there, possibly saving him quite a lot of money and time wasted as well. So we're trying to be as valuable as we can. We're trying to make it affordable, the network. None of this crazy 10, 20 grand bollocks that you see online. We just make it £100 a month. Everyone contributes to the network, and with that we can scale it and build something useful for people. So
live calls, listen to people's stories, and try and help them, even if it's one or two suggestions, ideas. People are potentially saving thousands of pounds of mistakes or lessons learned, or they're tweaking their the opportunity they've got in front of them just slightly. And these lessons that we've learned are super valuable. And one of the things that Dorian done, he went to some meeting, didn't he?
I'm here at the Property Developers Show, and I just bumped into this gentleman who's actually just signed up for the Ground Up Network. What's your name again?
So my name's Reece Cronin. I'm a Bath-based property developer. I started off with commercial to residential, but I'm obviously now find the Ground Up Network, and I'm looking to learn new build appraisals as well. So
he's working through the appraisals and the templates, and hopefully we'll see you on the weekly calls then.
We'll do on the weekly calls next Wednesday after years.
That's it, mate. Yeah, awesome, nice one.
But people are trying, some of the people listening now are asking for like a live event. So I definitely think we should try and get a date in the diary and see if we can get a because people we meet on the streets and in events who listen to this, they're just great. They're just people like us who are just on the journey, grafters, want to learn, and they love our banter and energy and stuff. So maybe throw that in at the end of this, and we'll see you at a live event coming soon.
Bumped into another chap, James Allen, recommends the podcast. Jane, you're a listener?
Yeah, great. I tune in every Thursday morning, actually, to be honest. It's, I really enjoy listening to the different outfit. Just business, not just property, the actual business area. But from 4 different types of guys from different business brains coming together and having those conversations, I just think is incredible. Really enjoying it. Definitely need to do a live one.
I was going to say,
I text Jack, I texted you a couple of months ago about it. You need to do a live session.
Yeah.
I think, Greg, you guys got to do a live one. I think you'd sell that out. You'd have a good few hundred people there having a good laugh.
Yeah.
I think that's fantastic.
Ryan, let's get it booked in.
Good.
Yeah.
Definitely, live event in the summer would be nice. So we are gonna try, but we're also sometimes too busy to coordinate things properly. But we will try and do a live event.
But stick a comment down if you are interested, and then that'll motivate us to try and get a date in the diary at least and a venue sorted. So if you're interested, put live event or something down, and we'll add them up and see what size room we need. Bye.
I'm just tapping that live event or something. Okay.
Just get out of the
See what
diary.
you're liking. It's fun to read. We got to really go to work, boys. So enjoy. Have a good week, and see.
Right, I'm off to play golf. Don't know what work is.
Fucking love it, mate.
Yeah,
Big
right.
love, everyone listening. Subscribe, share the podcast with people who might enjoy it as well. We'd appreciate that. Thank you, and see you next week. Bye-bye.
Ground up sound. Ooh, yeah.